more of an investor than a trader than I mean, as I understand it, like you're still holding core positions. You're trading on the edges, obviously. And, like both you and I talk all the time, like when you hold so many shares, you just cannot be like crazy nimble because, these stocks are illiquid. So, that's why I host these things with you because I'm not like in the day to day, like minutia of the whole, like what happened like at this hour and this hour. I mean, there were days like the past couple of days, I've been in meetings with some of these companies and I checked like stocks once, you know what I mean? So, I think we obviously have a little bit of a different style, but that's why I look
Yeah.
like a broad range of investment styles. That's what makes the market. Because if everybody was like me, there'd be like almost no volume most days, right? So I'm actually, I go online, I go on Twitter, I see people complaining. Doesn't really faze me. Sometimes I get annoyed. Then I'm just like, all right, I'm not going to check Twitter for the next, for half the day or something like that. But it's like eventually my thesis is like obviously these companies are going to do what they're going to do, and I believe there's substantial upside. And so me personally, and I think you might agree with this, we're going to look back on this years from now, all this like volatility, like it's going to look like nothing on the chart. You know what I mean? So that's just the way I kind of think. I'm definitely not as nimble. I'm still in accumulation mode actually, so I'm still building my positions. And so, I still have capital to put to work, and I'm trying to be nimble, et cetera, et cetera. But I am trying to also be mindful of catalysts, and it is such a catalyst sentiment driven sector.
Yeah. And like I'll say this. I haven't traded pot stocks since probably the spring. Now I've added, like I know you guys see like, hey, buy the dip, you pussy, which is just kind of a joke, but people take it to heart. But yeah, look, what you need to understand is if I buy any dips, it's because I've sold the stock higher, right? I've sold from my core, from that percentage. So I stick to an 80-20 rule. I have 80% of my position that I will not touch. And then 20% is what I trade. And that 20% basically pays me to be long. I'm basically using the spread, meaning, I sell Curaleaf at 18. Let's say I sell 1,000 shares for argument's sake at 18, and then I buy 1,000 shares at 16, and then I pocket that difference, and then I keep that difference for a rainy day, mainly the summer, but, and in February, guys, look, if anything you're holding hits an all-time high in February, for future reference, sell 30%. Because you don't want to go into March thinking like, hey, we're going to go higher. Because guess what? That shit ain't happening as much as you guys want it to happen. I mean, I was hoping that maybe this year would be a little bit different. There'd be a smaller pullback. But in February, look, I did a 2-hour webinar. And I was like, guys, we're getting a 30% pullback. I'm like, I hope it's less, but it's going to be about 30%. And right until July, we were about 30%, but that's just the cycle, and that's everybody's program for that, until we're off the OTC and there's less companies, which is also going to happen. It's going to be like that. But, to circle back to the trading, I'm not trading. And the reason I'm accumulating, and I did not think I would be accumulating at this point of the year. I thought I would be doing what I was doing last year, which was trading range on all of these things and accumulating more shares for free, right? I mean, I bought my first pot stock today since probably August, which is crazy. And not that I haven't been like, wow, these prices are amazing. But my strategy is a lot different. My strategy now is, all right, I'm gonna play the options, because I can trade those, because it's leverage, and because I'm trading a long-term idea. So, you know, anything I buy now, like I'll stop buying probably mid-January, if I need to add positions. And the reason being, the only reason that I'm even buying now is because I want to start the clock on it, in November, December, and the first half of January. Because when I buy something, I'm looking at it as, all right, I want long-term capital gains on this. So anything I buy now, I'm going to be selling next year or the year after that, because that 20% difference ends up being a lot of money, right? So yeah, I mean, I'm all for the buy and hold, but like Toby said, it's a little difficult to do that when you're holding positions, like single positions worth more than the value of your house, right? And it's like, what am I going to do? Like, yeah, like I'll sell some shares and, make like 500 bucks, $1,000, but there's no range to do it right now. So why even bother? Like, just have everything, have the clock start on it, add where you want, use the options to feed, those positions later on.
Yeah, that makes sense. I let me just kind of switch gears for a little bit. I'm going to bring Noah up in a few minutes, but I did just kind of want to cover a couple things related to just kind of fundamentals and things like that. Because yeah, Jason, I thought you were going to be like a little late to this, so I prepared like a little just really quick monologue. But I guess I put out a tweet a couple weeks ago. Because when things get a little like volatile, dicey, right, et cetera, like the stocks moving around, you get emotional when you're losing money on paper. I like to just kind of zoom out and just kind of review the thesis. And so I think most people on here are pretty familiar with this, but I'm just going to run through like at a super high level, like things to keep in mind. And, this is why I've been saying kind of like zoom out a little bit. And just, I know it's so easy sometimes to get caught up in the Twitter sphere. And, obviously like the past few weeks, everything's been about safe. Everything, like literally everything. Like it would seem like the entire industry's fate like hinges upon this one thing, right? And it's like, I understand, I get it, but it's like let's zoom out a little bit. So this is just a really quick short list of the things that I look at that keep me pretty bullish on the sector. And obviously I think most people know this. I'll run through it real quick. I might elaborate on a couple points, but firstly, obviously, super strong growth sector. I mean, it's we got 20 billion of revenue from the legal market last year, going to call it 24 to 25 billion this year, going to 30 billion next year. Going to, people are saying 100 billion, probably by the end of this decade. So super strong growth. I think the thing that to keep in mind too is like what's driving that growth is like, look at all these large states, like some of the most populated states in the country that still don't have adult use. Key states like New York, New Jersey, Pennsylvania, Ohio, Florida, Texas. Texas barely has a medical market. Eventually all these states will have some form of legalized, cannabis, both medical and adult use. So those states have yet to turn on. The top companies, and Jason and I stress this all the time. If you got to be overweight the tier ones. I mean, the tier ones, and we just come off. All the tier ones have now reported their quarter. Some had kind of softish quarters. I will admit, like some, obviously across the board we saw decelerating growth, but think about it this way. These companies are profitable. I believe all of the 5 tier ones are self-funding at this point. meaning they're not reliant upon equity capital. They don't need to go out and raise equity capital. And I had some meetings with a couple of them this week and, confirmed that. I mean, basically the message to me from the management teams was like, no way are we selling shares down here. And I said, yeah, of course, because if you did, like people are going to be pissed. So, I think, the best way to play the space is stick to the largest companies because they're not reliant upon, federal change. They're not, safe banking helps the smaller companies more than these larger companies. So, if I take a look at, again, like all five tier ones are self-funding in my opinion, but I'll use Verano as a specific example. Verano just generated $35 million of free cash flow this quarter. That's after funding growth CapEx. That's after paying onerous taxes because of 280E. So the probability of Verano going to zero is like zero because it's a self-funding business at this point. So stick to the tier ones because, bigger is better. They got scale, they're profitable. They have easier access to capital, even though access to capital largely is hard to come by. The other thing is, focus on the fact that and I know that people are aware of this, but look at what's gone on with the capital markets with the cost of debt decreasing this year. I mean, recent prints by the tier ones, some of these tier ones are getting cost of debt capital, 8.5. I think someone had 8%, but in the 8 to 10% range. And while that's still high, it's a massive improvement from 13 to 15%, a year ago. So the cost of debt's coming down, which is just super odd that the cost of debt would be coming down and yet asset valuations are declining. So, this is a little anecdotal story, but I think some of you on here know that I invest a lot in real estate. I had dinner with one of my real estate partners last week, and they're actually based in Colorado. They're based in Aspen, so they're familiar with cannabis is legal in Colorado. And I was explaining to them. Well, firstly, I said these U.S. public cannabis companies, if you add up all the market caps, they're like $40 billion. And the CEO of the company that I invest with, he's like, really? That sounds really low. And I said, what else is also really interesting is that the cost of debt's come down, yet the valuations have contracted. And that just is super unusual because, in real estate, when financing costs, when interest rates go down, the value of a property goes up because it's easier to finance the property. It boosts your return on equity. So people will pay more for it. So as it relates to cannabis, clearly, the credit providers are saying that these are better businesses. They're valuing the stream of cash flows at a higher level. And it just goes to show you how the equity side of the market is totally, effed up because of all the structural impediments. So that's another thing. Again, this is, retail is, the ownership of the space is heavily retail. And, I think that that's great because that means you guys can front run the institutions. Only 4% of the ownership of the space is institutional at this point. But we're starting to see, institutions get involved. So obviously, some of you guys might know this, but Eminence is like a $8 billion New York hedge fund. They recently took a stake in not only MSOS, but some of the actual companies too. So they're actually I think I saw that they're the largest shareholder of the MSOS ETF now. And so the CEO of that firm has actually been kind of he's tweeted out a couple things in support of cannabis. So, institutions are definitely doing the work, but most still can't buy. And then, I guess I go back to one thing I always point out, and I see free cash flows on here. So thank you, free cash flow, for all your work on the comp sheet. Whenever free cash flow posts his comp sheet, I just look at the market caps. There's $40 billion of market cap in this sector. It's just way too low in my mind, way too low. I saw today, my Goldman sales guy sent me the amount of call options that were bought on Amazon and Apple today alone was $250 billion of call options on Apple and Amazon stock alone. So that's already 5 times the size of of this entire sector. So I just think that that's super bullish. And then the last thing I'll say is obviously, I think from a sentiment perspective, the Mace bill is a big positive in my opinion. Obviously, I don't, obviously it's, she's young, she's a freshman congresswoman. Obviously, I wouldn't say that the Republican Party is fully embracing cannabis, but I think it's starting to change the narrative. And so, I put out a tweet a couple of weeks ago or something, and I fundamentally believe this: like, cannabis will be legalized, and you only have one chance to do it, and whichever party does it is going to have kind of a place in history. So I can totally see, both parties obviously are in support of it, but the do nothing Democrats are, they have their own reasons. They're holding things up. But it's just, we've never been closer. Like, I know people get really worked up on what's going on each week, but if you just zoom out, like, we are making progress. It's just obviously not as fast as some people who bought the stocks in February might have expected. So anyways, that was kind of my high level kind of recap of my thesis. I know a lot of you guys already know that. So yeah. So with that, Jason, did you want to say anything else, or maybe we should bring Noah up?
Yeah, I just wanted to add, because you started with safe banking. It's so preposterous to me. If you look back from the COVID low to really January, February of 21, how many of you guys were like, the frequency of you tweeting about safe banking rather than like, oh, hey, the House is going to take up the safe banking bill? Most people had no idea what it was. Honestly, if I'm being really truthful, I barely knew what it was. It wasn't really part of the vernacular, or probably not the right word, first word that came to mind. We weren't talking about it. It didn't matter. There hasn't been safe banking since forever. So it's never mattered. And now, and then in March, when things start to go south, and then at first, I think they voted on it in March, then all of a sudden everybody's like, we need safe banking. Guys, the thesis hasn't changed. It doesn't change with safe banking. Safe banking, 280E, uplist, are the gravy. These companies are going to continue to grow the way that they have been. Look, it's 2019. Curaleaf was doing what? Like 50 million in sales, in revenue. They put up 317. People are like, oh, it's a mess. That's the biggest number that's ever been put up. You guys got to like relax, have a breath,
Well, yeah, I think it's and I've said this, like, I view these companies as semi-private, to be honest. They're not fully public because, they're not on the major exchanges. So, and I know both you and I invest in private companies. I do a lot of private real estate. Real estate's inherently, a illiquid asset. So I'm fairly comfortable investing in things that are private. And the analogy would be, what if we didn't have these MSOs listed even on the OTC, and you thought about that you were investing in these private companies, and every single quarter you got the financial statements, you'd be pumped. Be like, wow, this company grew, by a huge magnitude. Look at these profits; they're exploding, and yet because they are traded on a, inefficient, illiquid exchange, people confuse. The perception is these companies aren't building equity value because the equity value isn't growing on these illiquid exchanges. But that's kind of the beauty of it, right? Because these companies are actually building equity value. It's just kind of hidden for now because you're not able to realize it because the capital markets are super inefficient, at least on the equity side. Now, I would be very stressed about that if my companies actually had to rely on a great, equity capital market in order to raise equity capital. All the tier ones are pretty cashed up. And, again, most of them they're all profitable and they're able to raise, they're raising more debt at even more favorable cost now. So it's that's the dynamic. So it's, someone posted a couple months ago on Twitter, I'm forgetting the guy's name, but I thought it was a really good post, but he's like, you can't have it both ways, right? Like you can't be pumped that you get the opportunity to invest in these companies before the vast majority of Wall Street because the market's inefficient. You can't be pumped about it yet at the same time be pissed that the market's inefficient. So it's one or the other, right?
100%. 100%. And if you're investing in a private company, a lot of times you're just raising money with the hopes that they're going to be able to execute down the line. We already know that these companies are executing, So, yeah, the IPO is basically when the institutions can fully get in. And that's something that you guys got to realize, right? When you buy a share of Trulieve, don't look at it as like $30 stock. Look at it as $100 stock. When you buy a share of Green Thumb, look at it 75. When you buy a share of Curaleaf, look at it as 50 at some point. Change the way that you view these things and you won't shit your pants as much. Trust me, guys, it's frustrating. We get it. Everybody in here gets it. But at the same time, you're like, look, if I wanted to buy, Curaleaf at 18, I still thought that it was a good value up there because the multiple is nowhere near where it needed to be. Now they're doing double the revenue from when they were $18. Why am I going to like it less at 9? That's all.
Well, you said the words Curaleaf and Boris hopped in here. So, hey, Boris, can you chat?
We always catch Boris off guard. I think Boris only wants to do our spaces.
Let's see if we can get him connected.
Sorry, Toby, I just landed. I just figured this thing out. I'm on.
Oh, yeah. Well, hey, yeah, thanks for joining. I messaged you earlier. Yeah, thanks for joining. Where are you, by the way? Can you say?
I just arrived in Florida. I spent the week out in California and Arizona, doing some stuff with our assets out there.
Got it. How's it looking out there in California?
Well, California it's what I said on the call. California is going through the same cycle that Oregon and Colorado went through, where, 2 years after adult use has passed, you get this period of, there's just too much product on the market. There's not enough enforcement. And so you do get some weakness. And I think that California is going to go probably through 12 months right now of, weakness in the marketplace. But we launched our Click product. We had a big event in LA. We had a big blitz through the whole state. Really great reception on Click. So we're super happy. But, I think overall, everybody needs to understand that, these individual states, they do go through a cycle. And the cycle is very simple, right? You have a very strong medical market. It goes into adult use. You get 2 years of very strong growth and expansion of margins. And then you get about a 12 to 18 month period of what I would call adult use hangover. And then the market starts to come back as the weaker players are squeezed out, and the larger players consolidate, and the illegal operators also shut down because there's not enough margin to keep them operating, and then those markets come back. We saw that happen in Colorado. We saw that happen in Oregon. I mean, I remember in Oregon, where a pound of cannabis was sold for $45 at the same time we were selling a pound of cannabis in Massachusetts for $4,000. And that's the structure of the U.S. market, right? Because you can't move between borders. So I personally think that California is going to have a rough ride here for 12 to 18 months. But it's a natural process. It's the biggest market in the country, and you can't, like my view and Curaleaf's view is, you cannot not be in California. If you're building national brands, if you want to learn how to compete in a competitive market, you got to win in California. And, that's why I spent the time out there, because we've got some plans, as I outlined on our earnings call. We'll be outlining our California strategy to the market in a couple of weeks. And we're very, very focused on it. And we want to win in California. And we want to, we see this downturn in California as a massive opportunity for Curaleaf.
Yeah, actually, Boris. So I actually was at one of your Vegas stores and met Mark Russ. Super nice guy, and he gave me like this goodie package. So I actually have the Click. I haven't tried it yet, and I got a bunch of gummies. Haven't tried them yet, but I'm a select user, so I will get around to it eventually.
Well, try the Click and definitely write me what you think, good or bad. Public, I'm not opposed to that. But we've gotten a great reception. I'm a user. I love Click. I've always got it in my pocket. We worked 3 years to create that device. And I can tell you why I know it's good. Stizzy's at war with us in California because they're so nervous about Click.
Stizzy's the number one brand in California.
Yeah, we'll see for how much longer.
I guess a question for you. I mean, look, obviously I chat with a lot of people about the company. I guess like maybe a little bit more color on your growth. I think with Curaleaf, a lot of it usually comes down to the growth versus margin debate. I mean, you hear it all the time. I hear it all the time. Maybe you could just kind of, again, clarify like your stance on that. And, I think people are just sometimes kind of confused because you guys are obviously the largest company by revenue in the space. But people look at your margins, and some people kind of nitpick on it. So I want to give you this opportunity to just kind of, again, like reiterate your philosophy and the company's growth strategy around that.
Listen, Toby, I'm not here to win popularity contests. To be honest, I don't give a shit what anybody else thinks. I know what I need to do. I've built many companies in the past. My focus is on growth. This is a time to grow. And again, I hate bringing up the analogy, but somewhere I saw on Twitter the other day after the earnings, somebody put up a earnings call that Bezos had in 2010, where everybody was slaughtering him for missing. And then he said, okay, guys, you want me to show you how much money I can make? He stopped investing for 2 quarters, reported a $5 billion net income, got on the earnings call. He goes, you happy? Everybody's like, yeah, we're happy. He went right back to investing. And said, okay, so I showed you what I can do, right? I can slow down growth tomorrow, and I can show the biggest numbers in the market. And here, let me just put things into perspective for everybody. Overlay GTI's footprint on Curaleaf's for all the states that GTI is in and Curaleaf are together. So take out all the other states of Curaleaf and just overlay that. We have exactly the same margin profile, dollar for dollar, the same margin profile. Now overlay Colorado, California, Michigan, Oregon, Europe, the biggest TAM, in the world. Europe and California, the biggest market, Colorado, the biggest market. And that's where these are brand new markets for Curaleaf, right? We've only been in these markets for less than a year. So we are building those markets. It takes time, but we're going to not only build them, but we're going to win in these markets. And how can you build national brands if you're not in California? How can you build national brands if you're not in Colorado? Or Michigan. These are the biggest states in the country as far as cannabis use and cannabis revenue. And so this is where we decided to go into these highly competitive markets and prove to the market that we can win. But you can't do that in 6 months, not in cannabis. It takes time to build the margin. So our margin on a like-for-like basis as good, if not better than anybody else's. And look at our cash flow. We generate $53 million in cash in the third quarter. Nobody did that. We're going to generate more in the fourth quarter. Next year is going to be a massive cash flow generative year. We're refinancing our giant debt facility right now. We'll be announcing that by Christmas, and everybody's going to be shocked on the terms. I can tell you right now that things are going very well at Curaleaf. I'm not worried about it. I'm very focused on growth. And, if people want to bail and they want to play the faire du jour, what everybody wants today, let them do it. I don't care. But all I care about is the fact that I'm growing the biggest cannabis company in the world. I'm growing the biggest brands in the world. You're going to see a lot of activity from us over the next 4 weeks in the marketplaces. We have a strategy. We're not looking to our sides. We're not looking at what our competition is doing. We're looking at what we're doing. As a leader, you don't look back, you look forward. And that's what Curaleaf does every day. We look forward, we don't look back. So I'm not interested in what the other guys are doing, but I do have to outline to the market, we have a different strategy. It's fundamentally a different strategy. And we have more cash than we know what the hell to do with. And we're growing at a very fast pace. Yes, there was a third quarter result. And by the way, I want everyone to know who's the company that called that in May of this last quarter. When everybody was saying, we don't understand, Boris, why you're talking about a slowdown. The reason we saw it before anybody else is because we have the largest footprint and the deepest penetration in the country. And so we saw that slowdown last May. We went public. We said to everybody the quarter was going to be slow. And by the way, if you look at organic growth, I think Curaleaf, I don't know exactly, but I think Curaleaf produced the highest organic growth rate in quarter 3. All the other companies had M&A close in the quarter. We're the only people that didn't have any M&A in the third quarter. And so we produced a 1.6% sequential growth rate. If you look, I may be mistaken, but I think that my analyst sent me the analysis while I was on the plane, and we're the only people that produced organic growth in that quarter. So, I mean, we're not, listen, and I think all the companies are great. I'm a big fan of GTI. I'm a big fan of Cresco, Verano, Trulieve. I think they're all great companies. But we at Curaleaf have a different strategy. It's fundamentally different. And so if you don't like our strategy, don't invest in our company. But we have a growth strategy. That's what we say.
I've always said that it's kind of great that the companies all have slightly different strategies because, you can build a portfolio around them. And exactly. I think most institutions aren't, especially, and I talk to institutions. I know you obviously talk to more institutions than I do. But if they're believers in the space, once they onboard, they're not just going to buy one, right? They're going to build a small portfolio. So I actually think it's great.
So let me tell you what an $86 billion AUM fund told me the other day, right after our earnings call. He said, Boris, why are you producing $53 million in free cash? You need to be spending it now. He goes, I don't want to see any cash in your balance sheet except for safety cash. He goes, I want you to spend it and I want you to grow. And by the way, that's what the big funds want. The problem in the analyst pool, you got to understand why, and I think this is an absolute mistake by the analysts in the sector. The analysts in the cannabis sector, firstly, are all tier 2, if not 3, maybe even 4 analysts. You don't have any top 1 analyst. The only one is, I think, that has 5 stars is the Needham analyst. But I think that this whole model that's been built around short-term, cash flow and EBITDA margin is built around the fact that they were worried in 2019 and 20 that these companies could not raise cash. And so what they did was they said to them, we need to focus on cash flow because we need to know that these companies can produce enough cash to survive the downturn. Well, guess what? We're out of that period of time now. There is no risk to these companies on a cash flow basis. Every one of the top 5 MSOs could reduce growth tomorrow in CapEx for a quarter or two and generate massive amounts of cash flow. I mean, Curaleaf spends $200 million a year on CapEx. Could you imagine if I slowed that down a little bit? If I slowed that by half, there's $100 million of free cash. Can you imagine if I take my financing rate from 13%, which is was the cheapest when we did it 2 years ago, and do it at 7 to 8% on $350 million? You imagine what that does to your cash flow. So there's plenty of ability to generate cash. We can reduce our inventories, but I grew my inventories dramatically for New Jersey Rec. I think it's the prudent thing to do. That's what you do when you're a growth company. You build inventory going into an event like New Jersey Rec or New York Rec. So these are the things that we're doing, and we think it's the right thing to do. I think the analysts are very short-sighted. I think they need to change their thesis because their thesis is built around an old situation that we had in 2019, 2020, where they were worried that these companies would run out of cash. Nobody's running out of cash in the top 5 companies right now. It's not. They've all built very solid businesses. So I think that thesis needs to change, and everybody needs to refocus on growth. But if they don't want to, I'm happy to do it for them.
I'm trying to get that. I talk to a lot of analysts, and I try to echo that message as well. Let me ask you, because I don't know how much time you have, so I just want to ask you, I guess my most important question is, obviously, there's obviously a disconnect between fundamentals and the valuations of the sector, and of course your stock as well. And there's also a very big disconnect between the credit markets and the equity markets. And that's obviously driven by obviously most investors cannot invest on the equity side. And these stocks move on sentiment and perceptions on what's going to happen in DC. So I started off this chat, and you weren't on here, but I started off saying, look, the tier ones are cashed up. Regardless of what happens at the federal level, they're strong. So it's more of a waiting game, right? It's more of a waiting game. Like the tier ones, none of them need to raise equity capital here. So just big picture question. How are you planning your business in light of what's going on in DC? And I guess what people want to hear is, regardless of what happens in DC, regardless of how long it takes, your growth plans are still intact. It doesn't really change your strategy or your ability to create shareholder value.
Yeah, listen, we obviously we built this company fully understanding what's going on in Washington, D.C. and not expecting anything to happen. But I just want to say one thing, but that doesn't mean that we don't have to work on getting something to happen. It's important for it to happen. And my biggest criticism of my colleagues in the MSO space is that nobody's doing fucking anything to get safe passed. And I don't have a problem voicing that, because that's my opinion. I think they're doing nothing. And, Curaleaf, with a couple of other players, mainly Canadian operators, and maybe one or two U.S. second-tier MSOs, are the only people working on this. And I think it's short-sighted. I think you can't keep the moat around for very long. The moat's going to come down. You got to compete. And I'm not sure why they're so all afraid of competition. Competition's a good thing. It forces us to be better companies, to produce better products, to market our products better, and to accelerate our innovation. And this whole concept of keeping this moat around, I think, is very short-sighted, and it's wrong. Now, we operate within that moat as well. We have no problem. We're building our company. We fully understand, what we're facing with now. But I'm thinking forward, and that's another reason why Curaleaf's margins sometimes look different, because you'll hear about this over the next couple of month or two. We're building a company that's going to have to compete against Procter & Gamble, against Anheuser-Busch, against Heineken, against all of these companies. And for that, I need to prepare and invest now, because it's too fucking late to do it when we get that legalization. You have to do it now, just like Europe. Everybody on the MSO gang, everybody criticized me for Europe. Well, by the way, I don't know if everybody knows what's going on. And, Germany is at 80 million. It's the third largest economy in the world. And it's 80 million people, and it's about to go adult use. And the way Germany goes, Europe goes. Everybody knows that they're the lead up in Europe. That's a $260 billion market in Europe. Okay? So, frankly, I don't know which market is going to be more interesting over the next 3 years, the U.S. or Europe. And everybody criticized me for that. Everybody said, he's going in too early. And by the way, did I know that Germany was going to go this year? Absolutely not. Was I surprised? I was surprised. But that could happen in the U.S. tomorrow. They could wake up tomorrow because of the Republican pressure on the Democrats and say, we got to get this. And I think this is what's going to happen. Next year, there's going to be a race to get legislation passed on cannabis. Not the Republicans nor the Democrats are going to want to go into the midterms without having done something. So they're going to be racing to get legislation passed. And they could get more aggressive than we all think. And if that happens, and all of a sudden interstate happens, then what are all these MSOs going to do if they're not ready for that? You have to be ready for all eventualities. You got to spend money today on that. And that's what I did in Europe. And now it takes years to replicate what we have in Europe. To be able to sell cannabis in Germany, you have to have EU GMP certification. You've got to have novel food certification. You got to have local German certification. These things take years, not days, years to get. And we're now positioned with all of that to be able to do it. And we did this on purpose because we knew we were spending money early. But, we financed it by selling 30% of our European business to a big sovereign wealth fund. They bought it for $130 million. They're now happy with this decision. We're happy with this decision. Yes, will it take about a year and a half to get to REC in Germany? It will. But it takes a very long time to position yourself. We'll be completely ready on the ground to be able to take advantage of that opportunity. And that opportunity will be massive. I mean, it's literally the third largest. I think it's tied with Japan for the third largest economy in the world. So, this is a huge opportunity, very high use. And for sure, France, Spain, Portugal, Italy, they'll all fall behind it. We're the first company to get the right to import into Italy through the Italian military. Curaleaf is the first company to get that licensing. So this is what we're doing. We're doing it quietly. We're working there with the authorities. We believe it's a huge opportunity. We think it's a bigger opportunity potentially in the short term than even the United States, given what the decision Germany just made. So you have to invest in front, and I think this could happen in the U.S. And if it happens in the U.S., obviously U.S. will be a much bigger opportunity short term. But this could happen next year in the U.S. We could get, a much more comprehensive piece of legislation as these guys start fighting it out for the midterms. The Democrats are obviously not in a good position right now for the midterm elections. They're going to want to get a run on the board. The Republicans, particularly the moderate part of the party, the Republican Party, wants to be in front on cannabis. So we're going to get we could get a very comprehensive piece of legislation. And if we get that, who's going to be ready for it? I hope we're all ready for it, but I can tell you who will definitely be ready for it is Curaleaf.
Yeah, I would imagine the international piece is, if like I'm an institutional investor, that's a big thing to me, right? Like I can kind of see it in your multiple. The reason you guys, your stock's cheap, the whole sector's cheap, but you guys do trade at a premium multiple. I would imagine, and that's where I always point out like the institution versus kind of the Twitter talk is like institutions, obviously the few that can buy your stock are more favorable on your stock than Twitter is because, institutions think growth. They can look forward. They're thinking growth. They're not looking at trailing margins, right? And they're looking at like optionality. Like Europe it's more than just optionality. But I guess like how important are things like that to the institutions like Europe?
I can tell you, listen, we have a couple of very large institutional holders in Curaleaf stock, some of the biggest names in the U.S. that found a way to get in. And I can tell you, my calls with them after my earnings call had nothing to do with what everybody wrote on Twitter. It was Boris, pedal to the metal. Keep going, keep building out. We want Europe. We want to see your West Coast strategy. We want to see you grow. And the guy, and I told you, 86 billion AUM fund told me, I don't want to see spare cash in your balance sheet. I want you investing and growing.
Yeah. How are what inning do you think we are in as far as institutional onboarding? And is it correct to assume that the vast majority of that has to wait until uplisting?
So listen, I got a very interesting call today from one of my bankers who said to me, Boris, we're just amazed at the type of investor that's looking at your bond deal. I can't say more than that. But I think that the institutional clients are going to be, institutional investors are going to be quite shocked to see the type of investor that's going to buy this. I hope it helps the whole industry. I was trying to log on when you were speaking about this, and I was listening in on my son's phone, and you were dead right on one thing, and that is that it's an anomaly where you have major long-only institutions buying debt. Debt costs in 2 years have halved, at least for Curaleaf, and which is just amazing, right? Just shows you the quality of the business. I mean, I think it was Jason said that when we went public that year in 2018, we did $77 million in revenue. We're going to do in 3 years, we're going to do over $1.2 billion in revenue this year. And that's just massive growth. And I think that the institutions are starting to see that and they're starting to invest. But it is an amazing thing. And it's strictly a plumbing thing. And, I'm not helping myself by saying this, but we have to fix the plumbing. The plumbing is that the institutional investors cannot find custodians. It's as simple as that. There's no question in my mind that they all want to invest in the sector. They all want to be there. They're all doing work. The biggest problem is finding a prime broker and a custodian that will do their business. And, these banks that have been pulling out, I've seen this before. Banks are very, very slow. Everybody's scratching their head and saying, why are the banks shutting down now? Well, let me tell you why. Because they made that decision 2 years ago, but they're so damn slow in their decision making. And so the other problem is going to be is that, once we get safe, it's going to take them a while to also, allow people to do the business as well. Because it's going to take some time, excuse me, to change, their because they just shut it down. So now they got to reopen it. So it'll take a year to a year and a half. But what they will allow, I think, pretty quickly, if you're a major institutional holder, a big pension fund or a big long only, and you're already custody with them, they're going to let you add cannabis. But where the problem will be is with the smaller investor. That's going to be a problem, getting the smaller investor on those PB platforms and into those custodies, right? So that's going to take some time for them to come up with policies. But for the big investor, they'll allow it. So you could expect, guys, just take a look at what happened last Friday, right? A Republican bill comes out, the stocks rally almost 30% in 3 days.
Yeah.
Right? So you can, and that's with no institutional money. So you can just see what's going to happen when we actually get legislation, not rumors of legislation, but real legislation. It's going to be a pretty aggressive rally. There's no question about it. And that's my investor hat on, not my operating hat. It's going to be, and these companies will get overvalued, right? It'll have, the Tilray type thing will happen where these companies will be worth, for a short period of time, call it a month or two, they'll be worth more than their fair value because there'll be this euphoria in the stocks.
Yeah. Boris, I always have, because, I have this debate with people. So, I'm a shareholder. I have Curaleaf gear.
Thank you.
Yeah, well, you don't have to, really, you don't have to thank me. Because, one of the things that I wanted to bring up, back in, it was 2018, you guys bought Select. Yeah. All right. You remember how much shit you got for buying Select?
Yeah.
Okay. Because I
get shit. I get shit, Jason. I get shit for everything.
I know. I want to.
I'm a Russian spy.
Yeah,
I'm a communist. I'm, you name it. You know what? I've gotten used to this. It doesn't bother me at all. There's only one metric in business that matters, yes. And that's how much money you make.
That's right. But if I always say to people, because, I always hear, well, Curaleaf doesn't move like this company or that company. And I'm like, who gives a shit? You don't want it to move because at the end of the day, they bought Select for $1 billion. How much do you think Select? By the
way, we bought Select for $300 million.
$300 million. How much do you think it would be worth today if it went public?
Listen, it's the largest brand in the country by stores that it's in, and by the way, a lot of people don't know that because Select only starting January will start to cooperate with Headset and BDSA and all those, right? So we haven't given our data away. We didn't want to. I think now we're going to because we're sick and tired of seeing other brands, listed as the largest brands because, So we want to prove that. So instead of saying it, we're going to prove it by actually giving data to the data companies. But Select today is sold in 21 states. I think we're selling about almost 15 products under the Select brand. Click is another massive innovation. We had Squeeze earlier in the year. Now we have Click. We've got some really, really cool stuff coming out in the first quarter of next year that I think everybody's going to love, and it's going to go. There's products focused on summertime, so they're going to launch into 420. I think they're going to be great, and so we're constantly innovating, we're constantly adding, and Select today you can't replace it. You just can't replace it. It's now sold, and by the way, we needed the footprint before we could distribute that brand nationally. I can tell you, I was in California. Every brand company in California wants to talk to Curaleaf, every single one, because they have no way to distribute nationally without talking to Curaleaf. No.
Right.
But I turn around and say, why do I want to distribute your brand? I just create my own. and distribute it through my infrastructure. That's where the
Right.
value is in owning your brands.
The formulations are where it's at,
Yeah.
the building of and the creation of those brands.
Exactly.
You know, yeah, and this is, I think, a point that a lot of people missed, was that, you know, and to what I was saying before, you guys spent the money in 2018, 2019 for footprints that other MSOs are spending now, like four or five, a lot more, right? So you did the hard work, or the hard part, I should say, of, you know, keeping your cash, using your stock, and then turning that, you know, because it's an actual case. And because look, Boris, you got to forgive everybody. In cannabis, they only know bad dilution. They don't understand good dilution, you know, like, so forgive them. I mean, the EMAC deal.
Listen, every company that sold their company to Curaleaf, every shareholder that sold their company or entrepreneur that sold their company to Curaleaf and took stock, I can name them all, you know, it's like 15 of them. They all have made a lot more money owning our stock than taking cash.
Of course.
So, you know, we've created massive value in the stock. Obviously, right now we're in a dip. But take a look at the Trike deal. We priced the Trike deal at $17.50 Curaleaf when it was trading at $12. So people that we're buying these companies from are prepared to take our stock at a higher value than where it is trading on that day, because they understand that this current volatility in the stock doesn't represent the value. And the smart investors are prepared to do that because they understand that they're going to make a lot of money with Curaleaf. I mean, I paid for Trike the same price Cresco was going to pay for Trike 2 years before that, and the company's doubled in size. And so, you know, it's just, we also wait. Notice we didn't do any deals except the European deal, you know, during the year, because we didn't like the valuations. The minute the valuations came down, Curaleaf starts doing deals. We're very focused on allocating our capital at the right price. We're not going to overpay for assets. That's a formula for disaster.
Right, and then on the EMAC deal, you sell it and then get the company to cover the cost of the expense.
I bought the company, and then I sold 30%. Well, yeah, I think it was 30% of the company for $130 million, and I fully funded the growth of the business in Europe.
Perfect. And I actually, after the EMAC deal, I actually made an investment in Germany with the same idea. I was like, okay, you know, if Boris could do, you know, is going to Europe, I'll take a look.
Guys, Germany is going to be a massive market. It's going to be the bellwether for Europe. Everybody needs to get their heads out of, you know what, about the U.S. is a great market. Don't get me wrong. I love the United States market. But, you know, I spent 30 years operating out of Europe, and I can tell you one thing. It's a massive, massive market, much more bureaucratic, much harder to deal with. But that's the opportunity for those that are prepared to invest, those that are prepared to get in early. They're going to get the payday by being in that market. It's a very big cannabis use market. It's just that many people in the U.S. don't know that market at all. And it's going to be very, very large. And this German news today is just, and I mean, can you imagine if we got the news that we got in Germany today in the U.S.?
No. I know that after that news hit, and you know, some of the news was kind of trickling out, but I've been following the election. And for everybody, you know, Merkel's party has been in power for like 50 years. And, you know, they basically, they have to split governing with the capitalists, and the capitalists all want weed. So yeah, I mean, you know, that changed the valuation of the company that I invested in dramatically. And now everybody's just kind of like scrambling. But yeah, I mean, you know, you're the biggest company in the world, and the biggest company, I hate when, they're the biggest company in the United States. No, you're actually the biggest company in the world. And I think you said this on True Trading Group stream, you know, that basically Europe is where the United States was in 2016. It's like buying Curaleaf in 2016, knowing what Curaleaf would be in like 2021. And now this just speeds up that whole.
And now they're leapfrogging. And now they're starting to leapfrog. This is embarrassing to the U.S., I think.
Yeah.
I'll be honest with you. Germany, a very conservative country, moving to legalize cannabis while the United States is still fucking around in D.C. and they can't get anything done. I mean, it's embarrassing. It really is. Now, I think it's going to push the U.S. Listen, guys, the stars have never been better aligned for this sector. I want to tell you, everybody, you invest in the top 5 companies, you're all going to do well because the setup right now is amazing. Now, don't worry about the intraday volatility. Really, just don't worry about it. Now, if you're not, don't buy on leverage. It's a bad thing. In very volatile stocks like this, put your cash, unlevered cash into this and put it away, and you're going to make a lot of money in this sector. There's no question in my mind. Nothing's going to zero. I was just checking in when somebody said zero. That's not going to happen in this sector. It's just not. These numbers are far too great. Can you imagine if 280E goes away, what the numbers are going to look like in these companies?
It'd be silly.
I mean, it's just, today we pay an effective tax rate, everybody, of 80%. I want everybody to understand that.
Yeah.
These cannabis companies are paying an effective tax rate of over 80%.
I guess, the crazy thing, Boris, is like you're the largest. I always think of you guys as the largest company in the world. And yet it's like I can buy your stock for under a $10 billion enterprise value. But again, I'm a big fan, but the biggest pushback people usually have is dilution. So it's like you want to do more stuff in Europe. It's like to execute your strategy, how much more dilution, is needed?
Guys, I have never diluted the stock at a value below where I've done the previous deal, ever. So, the reason the Trike deal got done at $17.50 was because I raised money in January at $16.70. And I basically said I won't do a deal at, below that price. So, guys, we're good at what we do, and we're building value in the company. And we are, and the biggest pressure on all of these stocks is a lot of these companies. I mean, look what's happening to Verano. Verano's a great company. And what's happening there is they chose a different strategy than Curaleaf. They unlocked everybody within 3 months of their IPO. Curaleaf has a 5-year program. Every company we buy unlocks 5% a quarter over a 5-year period. So we're managing the amount of stock that hits the market. That's what we're doing. If you look at the Trike deal, it's actually out 3 years. So we're constantly working on making sure that we manage the flow. But I'm not going to stop investing and building the business because of that. I'm just building the structure the right way, the cap structure, to make sure I don't get punished unnecessarily. I think Verano's being punished unnecessarily right now by their shareholders. They're a great business. Their CEO is a great CEO. I have a huge amount of respect for everything that they're doing, and they don't belong anywhere near where they're trading today. And, I don't normally talk about other businesses, but I think it's a travesty, and I'm a shareholder in Verano. I am. I love what they're doing. I love their business, and I just think that they're worth a lot more than they're being got. But it is a plumbing problem, right? They released all of their shareholders. A lot of the companies they bought, people had a cost basis of 0 in that stock, right? Because they were founders of those businesses. And so they just want to take their generational wealth off the table. Just imagine people that were making $50 to $100, maybe $200,000 a year, all of a sudden have $20 million of stock. Now, if that stock is 10 million versus 20, do you think they care? No. So if it was 20 and by selling it, they took the stock price down by 30%, they don't care. They're still putting $10 million in it. They never dreamt of that kind of money. Right? So that's the problem right now, but we have to work through this. And we are. I mean, most of the companies, for instance, that Curaleaf bought, were probably 40% through the cycle of these people selling. And once it gets over 50, it's not going to be even noticeable. But but that's what happens is you get people selling the stock. They're selling on a quarterly basis, and that puts pressure on the share price. But it's as big money starts to come in this market, it'll disappear. It won't even be a problem. I personally think the stock has traded very well, given the amount of companies that I've bought and the business that I've built and the amount of stock that people received. I think the stock is trading very, very well. I'm very pleased with it, actually.
When do you think these companies are going to raise more equity capital? You think, if we get a 50% lift, people are raising again, or?
I don't think the top 5 need to raise equity capital here. and I'd be surprised. And again, there's good times. Like if you can do a massively accretive deal, and you can raise the capital to buy it, you should do it. I mean, again, dilution, as long as it's done for the right reasons, is a good thing. If you're adding value to the business, you should do it. But at the moment, I haven't looked at everybody's numbers, but everybody's pretty well cashed up, and everybody's now generating cash. And let's be honest, they can slow their growth, their CapEx down for a quarter or two, and leave that cash on the balance sheet if they have to. I mean, all of us are investing, almost $200 million a year in CapEx. So if we slow that CapEx schedule down, that's all money that goes right to the bottom line. So, I don't think anybody has a big CapEx need, a big cash need right now. Not in the top five.
Got it. Hey, my last question is just around SAFE. I mean, obviously, you probably don't spend that much time on Twitter, but Twitter the past 3 weeks has been obsessed with SAFE, like in the NDAA, right? Like, is it passing? Is it not? The last time you spoke, I think you were on record as saying you thought SAFE would pass. I think it was 1Q or 2Q of next year, first half of next year. But just any updated thoughts?
I'm still of that opinion. Listen, the NDAA again. I want to again say that Germany was an unexpected surprise, so we could get the same here. But I don't plan my business on unexpected surprises. I look at the worst case scenario always, and I plan to that scenario rather than the best case. If the best case happens, great. But I got to plan for the worst case. I think it's the first half of next year, probably towards the second quarter, not the first quarter. I think the NDAA is a problem because, listen, it's the defense bill. Why the hell is cannabis in the defense bill? So I think the Republicans don't like it. I think Schumer doesn't like it because it's not comprehensive enough for him, the law that's there. Listen, I would take it if we got it. I'm never going to complain about any law in this country that says cannabis. I think is going to open up the floodgates. No matter what's in the law, I think will open up the floodgates. But because there is no federal law today that even says the word cannabis. So I think this would be a positive thing. But I don't think it's going to happen. Like my personal view, my lobbyists are telling me it's 50-50. Joe Bayern just spent 3 days in D.C., lobbying on behalf of the industry, on behalf of Curaleaf. And I just want to say that I think we will get it. I think it's going to be a first half next year. I personally prefer that timing, and I'll tell you why. I prefer it because I'd rather make sure we get a good bill than a shitty bill. And right now, if we pass the NDA, it's a shitty bill. I mean, it's okay. Like I said, I'd take it. But it's not a great bill. It doesn't address all the issues that the industry needs. We need to address tax first and foremost. And then we need to address banking. And then third, we need to address safe harbor language for investors. Those are the 3 things we need to address, right? And it doesn't have all of those 3 things in the current draft of it. And I think it would be better if they could get this thing out of the way, sit down, focus on putting together. I think the closer we get to the midterms, the more they're going to want to pass something. So if they pass something now that's halfway, we're not going to get anything next year, right? They won't have time to focus on cannabis next year. But the closer they get and the more noise we make, all of us on Twitter and writing letters and doing that, and we're actually setting up a super PAC now to do this and raise money from the population to do this. The more pressure we start putting on them next year, once we start reaching out and say, we're gonna actually, we're gonna lobby against you, Congressman, or against you, Senator, if you don't focus on cannabis, they are going to start really focusing on this, and they're all going to want to get something done because this is a very popular bipartisan issue in the country. So I'd rather let's give it some time. Let's put pressure on them right in advance of the midterms to get the best possible law that we can get. So that's my thinking on it. Again, I'm very open to other people's ideas. That's just the Boris Jordan.
But I just want to make sure I'm clear on what you're saying. You said you'd rather have a more comprehensive bill. You want it to be you want SAFE to address a little bit more aspects. You mentioned something about safe harbor for investors. Are you talking about uplisting? Because the current kind of consensus view, and I've had meetings with Joe Bayern and Joe Lusardi, and I meet with all the other MSOs. And whenever I ask any MSO about SAFE versus uplisting, I get a wildly different answer between the time lag between SAFE and uplisting passing. Are you saying that there's potential for SAFE to potentially include some aspect that would either include uplisting or just massively expedite uplisting?
Yeah, I think that the two Joes probably are trying to taper, expectations because they know Washington very well as well, and they spend a lot of time there. As a matter of fact, the last 6 months they probably spent more time there because I was taking one of my other businesses public. But that's done now in October, and I'm focused on back on Curaleaf. But I personally, my view is that that safe banking needs to have three components in it for business and then a social equity component. The business components are we need to fix the taxes, we need to fix the banking access, and we need to fix the language for safe harbor to give investors comfort that they can invest in the sector. Now, what that means for uplisting is a different issue. I personally think that there'll be such pressure on the exchanges that they'll do it. They'll uplist, but I don't think it'll happen overnight because I think they all got to go through their committees. They're gonna talk to FinCEN at Treasury. They're gonna get FinCEN's opinion on this issue. So it's going to take some time. However, I do think that the companies will be allowed to uplist in Canada. Listen, Curaleaf's probably done more for that issue in Canada together with the folks at Canaccord than anyone else. We spent 3 years working on uplist in Canada. Now, we have been told right now that they need a little bit more than what they have available to them to allow that because, the banks basically, the banks own the Toronto Exchange and the TSX, and the banks basically went and they said, guys, we have big, large U.S. operations. We can't do this until we get a nod or a wink from the U.S. that they at least recognize that this industry exists from the federal government, because that's not even recognized right now. So I do think that almost any safe will allow us to uplist in Canada. That I'm pretty sure, not 100%, but I'm pretty sure about. And I've spent enough time on this to be able to say that. On the U.S. side, I also think it will happen, especially if the Toronto allows it. I think the U.S. is going to move pretty quickly in that direction as well. I have been told by several very large U.S. institutions, banking institutions, that if the U.S. companies trade on the TSX, that they will custody investors if we trade on the TSX. Frankly, it doesn't matter then whether we go to NASDAQ or not, because the amount of demand for these shares will be tremendous. The TSX is a perfectly fine exchange for the large U.S. investors. There's no issues associated with that. I mean, U.S. people like BlackRock and Fidelity and Capital and all these, they buy companies on the Nigerian exchange or the South African exchange or the Russian exchange. For them, the exchange isn't the issue. For them, it's the custody is the issue for them, right? And so if they can get custody at JP Morgan or Bank of America or at Bank of New York, Pershing, then they will buy as long as we're on the TSX. And I've been told by the large institutions that if we're trading on the TSX, they will custody these shares. I think that's, again, they could change their position, but they've been very open in saying that if the MSOs trade on the TSX, they will custody. So I think that's going to be a major, major step in that direction. And then whether the U.S. goes in that direction or not, I personally think it will, because I think there'll be too much pressure for the U.S., particularly from the large banks who want to do business with these MSOs, not to uplist us to the U.S. exchanges. So I think that it'll happen, but I think it all takes a bit of time. And first, we got to focus on getting the legislation, and that's what we're focused on now. I think it happens in the first half of next year. But listen, we could be surprised this year. We could be surprised either in the NDAA or we could be surprised in reconciliation. It could go into either one. I personally think it would be better next year, fully negotiated, and proper, but it could happen this year.
I mean, to be clear, it's when, not if, right? You 100% share that opinion?
Oh, yeah. Listen, the pressure, I've never seen this level of pressure on Washington as there is now. Every constituent group except pharmaceuticals is lobbying for cannabis, and the money's big. Money that's being spent in Washington right now is very big. I can't name it, but one company, a major multinational that I know of, has spent $25 million only in the fourth quarter to lobby this.
I mean, you cannot be a company generating $2.5-3 billion of revenue a few years from now and still on the OTC, right?
I mean, listen, I've seen worse. I mean, Tencent, the giant Chinese tech company, trades in the OTC, but it also trades in China though. on a big exchange. So I've seen some crazy things happen in my life, but I would agree with your premise. Yes, I think it would be very strange if that was the case.
Well, I think Tencent's also worth over $100 billion. So yeah,
I know, but it trades on the OTC. It's the most amazing thing, right?
Yeah. Well, Boris, we want to be respectful of your time.
Thank you, guys.
Thanks, Boris.
Yeah, thank you for joining.
Always happy to do it, and thanks for the invite, Toby. Glad to have done it. Thanks, everybody.
Thanks. Bye.
Bye.
Okay. Nice surprise.
I always love when Boris comes on because he's not gonna like play patty cake with you. He's just gonna just tell you, you know, like Boris is he's like my CEO spirit animal because he just says exactly what's on his mind. He's like, this is how it is, you know, except you know people like him more.
There's a theme among that with billionaires. Billionaires tend to do that, right? I mean, look at I mean he's not, you know, obviously I have a lot of respect for Boris, you know, but look at Elon Musk, look at Jeff Bezos, right? Like, you know, so yeah, no, that was good.
Let's bring Noah up.
Yeah. Hey, no, I know I was trading DMs with Noah. Noah, if you're ready. I don't know if Noah's done it. Noah prefers the periscopes or the Twitter video thing. I don't know if Noah's actually done a space. Here, let me DM him.
He pops in.
Yeah, but no, that was super informative. Look, obviously, your Curaleaf, I think, you've been on record. Curaleaf's your biggest holding. It's my second largest holding. I mean, Green Thumb's my largest holding, but I, you know, like both companies. And, you know, I think what was nice is, you know, Boris was, I mean, look, he's complimentary of all the companies. Like, and that's what I've been telling people is like, you don't have to fight it out on Twitter on like, which is the best one because,
right.
You know,
it's so stupid.
Build a portfolio. Honestly, each company has its strengths and I don't want to say weaknesses, but each company has its own investment attributes. And what I find, like I always kind of put Trulieve and Curaleaf at like opposite, and they were at opposite ends of the spectrum, right? Because Trulieve was like super high margins, but very concentrated footprint. And Curaleaf was very diversified, you know, obviously not great margins. And I think both are great companies, but I think that, I think having the different growth, each company has its own strategy. So build a portfolio around them. Most of these big institutions that are going to buy into the space, they're not just going to buy one company.
It's silly to think about it that way. Exactly. So, yeah, look, you know, I think everybody needs to own Curaleaf, Green Thumb, Trulieve. Look, you're going to have your favorites, but talking shit about, you know, any one of the big three, you're only shooting yourself in the foot. You know, it really is, you know, if one does well, then other people are going to gravitate to the other just because, you know, maybe one's running. It just boosts the sector and the profile of the sector, right?
Yes, I agree. These, what I've been saying, and I think I told you this, these are all houses in the same neighborhood. So I find it interesting, and we're not going to get into the weeds on this, but I find it interesting when company A talks crap about the other companies, because it's like, firstly, you're just confusing a lot of investors because like that, it just never, and I've seen this, by the way, Jason, I've seen this in like so many other industries. Like, you know, a company that's IPOing will talk shit about a company that's already public that has a higher multiple than what they're IPOing at. And we would always tell the management teams, what are you thinking? Like you're going to be benchmarked against this other company. So you want to, you know, not talk crap.
You want to be like, it's like AMD talking shit about it, NVIDIA.
Yeah. Yeah. So, hey, Noah, are you here?
I am on. How you boys doing?
Good. Well, Noah, you have the luxury of following up Boris. So
that's horrible.
Uh-oh. Don't worry. I'm sure there's a Twitter thread coming.
Yeah.
You and Dan.
Yeah. Well, hey, thanks for joining. Yeah, I
Sure.
invited you earlier. Look, I guess I just wanted to, and again, I wasn't on Twitter like a crazy ton the last couple days, but just obviously saw some angst about some, I don't know if they're MSOS shareholders or just sector shareholders in general, about sort of what the ETF is doing with its cash and how they should be managing it. I did jump on your live stream last night and I want to just put it out there. It was like, look, if you own the ETF, it's like you hired the manager, let them do their job. But if you don't like
Right.
it, then you're free to. There's daily
off.
liquidity, right? Like there's daily liquidity.
Right.
So yeah, I guess I just wanted to kind of give you a chance to just maybe kind of clarify a little bit like what you guys are doing with the ETF, what you guys are doing with the cash, what the strategy might be. So yeah, kind of an open forum.
Sure. Well, first, thanks for having me on. You were right. This is my first Twitter Spaces. I've been listening to a few, but first to participate on them. And I do feel a little bit weird, sort of not kind of debriefing everything that we just heard because this Spaces was awesome. But to jump back to the very beginning before Boris, my funny answer is I would echo everything that Jason was describing, right? About how the ETF operates and what we're going to do and where that benefit and advantage is to keeping a little bit of dry powder, and how in many ways, we kind of almost run the ETF, how he described longer term focused investors might want to run their portfolio. So in many ways, that's sort of the simple story to it. And it's weird, as I was hearing Jason talk about it, the thing that sort of came to mind as I was comparing it to the crypto space, and think about all the craziness they have gone through. And I know it's all sort of bounced right back up, but they really had a dead zone for a while as well. No fundamental reason. Popularity was growing, more wallets, more everything else. The Bitcoin fundamental data was out there and growing in the right way, similar to what I'm seeing in the cannabis space. And it's interesting because in that environment, there was this mindset and, approach where they talked about, stacking Satoshis, right? Some fraction of a Bitcoin. And so that was the rallying cry for those who are big fans of crypto and built Bitcoin was, doesn't matter, we're stacking sats, doesn't matter, we're stacking sats. And we kind of don't have that in this space, right? We had a nice run up and then it fell right back down, and everyone is, and I say everyone is panicking. Someone just made the comment of, the chatter and are they shareholders? I don't really think that they are. They might be to some degree, but, it sounds like most of the people that are focused on price action or gamma and option trades, and there's nothing wrong with any of that, totally makes sense. It's just not what the ETF does. I think it's more just tending to that, right? I mean, most of it, I feel like people are sort of coming at it with a slightly more short-term and ulterior motive, but that's also okay too, right? I don't mind any of that, and I think as Jason said, right, the ETF is good for you and you'll invest in it, but and you kind of said it too. If it's not, there's other ways to invest in the space, and it's weird too because people do feel like we are a big component of the overall trading that's going on in the space. And I think as we even saw today, we weren't all that active today and the market was moving around just fine without us. I mean, we're a small sort of player in the space relative to all the other trading and all the other investors that are going on. And when I hear Boris talk, I think, holy cow, right? There's so much more money, pent up that is coming to the space. When you think about going from 0 to 10,000, we're at, 0 to 100. And those institutions aren't worried about the gap between 100 to, 1,000. They're going to be there at 1,000 and then ride it up to 10,000. And in some ways, I don't want to say that's entirely our mindset because we are lucky enough to be able to participate in the growth that we've seen, earlier this year, tough zone in the middle of the year, interesting dynamics going on right now. But I'd also say too, and I think you guys know this, but some people probably don't, not our first rodeo. You see a lot of money and you see a lot of activity over headlines, and especially, headlines from politicians. And the headlines are awesome. And I love what, Representative Mace is doing. But, it's just, you've seen this before. It's history does really sort of rhyme and repeat a little bit. Hot money comes in, that hot money is going to go out. You guys saw that today. We had about 24 million of outflows. So you want to be ready. You want to be smart. You're deploying dry powder for all the reasons you guys were talking about earlier, but you're also sort of trying to deal with the operational aspect of just running an open-ended fund that provides that liquidity. You put all that money to work and then people jump right back out because the headlines don't excite them anymore. And that's a big cost, right? Round trip, $25 million in the fund could easily drag down 150, 200 basis points of just commissions, operation costs, spreads, everything else. So it's hard to know what to do at any given time, but you could easily look at what happened over the last week and say, oh my God, one, that's awesome to have the big run up that we had that one day that was, I guess it was Friday or Thursday, it was up 10%. And like Jason said, never, a bad idea to, enjoy some of those gains and take them off and wait for another entry point if that's your investing style. But, we know that the space will be volatile. We know that the flows will be volatile. Our goal, and it really is in a sense, not to push prices up or kill the shorts. We just want to be a good active manager, right? We want to beat a sort of quote unquote benchmark, even though it's sort of hard to find one of those in the space. That's what we want to do, right? So I look at something like an MJUS, fully invested as best as I can tell. We outperformed them on the run up, even with the cash drag. And then now having the cannabis market kind of pull back a little bit over the last few days, outperform them again in that time frame. That's exactly what I want to do. Now, that's, of course, only over the course of 1 week, and I want to do that over 1 year and 3 years and 5 years and 10 years. But from our perspective, my perspective, it's working exactly, how we want it to. So I don't know. I'll probably pause there for a second and breathe and see if there's comments, questions around that.
I guess, and I've asked you this before on some of your daily videos that you guys do, and I super appreciate those. I think those are very informative. But do you happen to know currently the breakdown of the ownership of the ETF as far as like retail versus institutional? I mean, those are kind of the broad buckets, but then of course there's like high net worth, there's like RIAs, there's family offices, but just at a broad level, because obviously we saw Eminence is like the largest. They own, like, I think they're the top shareholder of it right now, right? And so just, do you happen to know what the breakdown of the ownership is, retail versus institutional?
So I don't, only because when you think about the data around that, it's similar to the question of, what's the breakdown of ownership of Apple? You can kind of get close to it, but you really don't know unless, you're DTC and you see all the underlying holders. So for us, we can see information like you can see, right, through 13Fs. We get, of course, more anecdotal information in terms of emails that we get coming in or the phone calls that Dan's on or our sales guys are taking. And honestly, as best as I can tell, it's all three. It's, a lot of self-directed investors who saw the headlines. And I think one of you guys made the comment earlier about Pomp, making a comment about cannabis stocks. That brings a lot of, of self-directed investors in, right, when someone like that is mentioning it. But at the same time, we also know that we're getting better traction on RIA platforms. And we certainly know there's been a reasonable amount of, what I'd call family office hedge funds who have called us and have had calls with Dan that are also invested in the fund as well. So honestly, as best as I can tell, it's all three. How evenly split is that? I don't know. My perception is this fund, especially more than, the rest of our funds, is heavily driven by self-directed investors. But at least as of late, it feels like a pretty reasonable balance between all three.
Got it. Yeah. Go ahead, Jason.
Yeah, I wanted to say something because I just saw Jane's tweet on, dry powder, 137 million as compared to 171 yesterday. And, look, at the end of the day, because I was kind of watching the levels and watching a couple of companies, I started to see the uptick in volumes. And, specifically, you guys saw a tweet that I put out. I said, I think that they're buying Cura, Trulieve, and Cresco, and you guys didn't buy that today, which
right.
is, and somebody said, well, I didn't see, I guess, the certain maker, and I was like, that's even better.
Even better, absolutely.
Even better. Like, because, look, like at the end of the day, look for, and you talked about options, right? So of course, I'm, myself, Todd, I'm trying to get Toby to the dark side really on the options.
Jason's my options consultant for sure.
Nice. I love it.
So yeah, I mean, I was seeing a lot of activity yesterday, today, on the options. But I think it's really, it's so much better that it wasn't you guys today. I mean, I was hoping it was. I was like, okay, cool. I'm like, Dan's, I sent Brady Cobb a message. I'm like, oh, it looks like, all right, this is crude, so I'm sorry for the ladies. I go, look, I'm like, it looks like Dan's swinging his money dick around, and protecting these levels. And I'm like, man, you think he could have started like 2 minutes earlier to get us back to that 29-25?
Right.
But, the fact that you guys didn't have to spend that on the MSOs is really positive. And, look, at some point, hopefully soon, I think, buy some of these on the discount.
Right.
But look, at the end of the day, the space is going to be the space. And as much as I would love for you guys to fire up, and spend on the MSOs, because look, it's self-fulfilling, right? You buy the MSOs, people, it shifts the sentiment, and then MSOS goes up, and then more people buy that. You get more inflows, then you can backstop. You have cash to play with. But yeah, look, I just think that a lot of people didn't really understand, why you weren't spending. Gee, somebody having some whiskey?
That's me. Sorry. Wine.
There you go. Why you weren't spending it on Monday. And that would have just been, I mean, trust me, you guys all know, like, I have no problem giving a critique to anybody. Noah and Dan know that, especially with allocations. We had a very nice chat about it in Vegas. And Dan's like, could you be a little nicer? And I'm like, Dan, that was me being nice. so yeah, look, I think that, steadying those top 10, and having, the power REITs, the IIPRs, the GrowGen, the Hydropharma, in there is important, because, for the institutions that kind of see the writing on the wall, like, they'll, go like, yeah, I'll buy those. Right. And
right.
they might not want the, some of the exposure in the ETF, but if you're holding it, so you're also benefiting from them, passively.
Right. And they definitely still want to balance as well. And a lot of it is what you talk about. And I think in a good way, educate investors on, and a lot of it just also depends on what the investor's goal is. But you say it all the time, right? You see these big run-ups, be patient, let it blow back off. It's a volatile space. These are still micro cap stocks. There's a little bit of that, certainly in Dan's process. Sometimes there's more to it on the back end of things, but it's that. I mean, as of a day ago, we were 84% invested. So even if we were wrong and today it was up 100%, right? Dramatic. We missed it. Some big news, as Boris talked about, get surprised like Germany. All right, well, I'm up 84% and the category's up 100. We're okay. If it's just 10%, well, I'm up 8.5% and the category's up 10%. We're okay. So I think that's the mindset and the mentality, right? You don't have to eke out every basis point. I really do want to beat the passive approach, right? Being active managers, that's important to us, because then it's not really worth paying the fee, right? I mean, if we can do what we've done as compared to MJ, still charge a lower management fee than the competitors, long term, I'm going to keep, longer, happier customers, I think, in that exchange traded fund. So, it's hard. It could have easily gone the other way. It could have easily carried on. It could easily be up another 10%. We could easily be getting, punched in the face, a few more times on Twitter over that decision. And we're not always going to get it right. But if I can just, bat a little bit over 500, as everyone knows in the active space, that's winning.
Yeah. And I'm just going to say this because I want to say
it. Let it out.
And people and probably a lot of people won't like this. But this was something that I said.
That means it's going to be a good one.
Yeah. This was something that I said to you in Vegas.
Get ready, everyone. Get ready.
Right. Put your kids in the room.
Yeah. I mean, I would just drop every tier 3 and tier 4 company in there.
Well, hearing what Boris talked about, I actually, by the way, I was sitting there and I'm taking notes through the whole thing and I'm about to shoot it off to Dan. But I definitely heard that kind of from him as well, right? Don't need to raise capital in the top 5. Well funded. He, at one point used the phrase more cash than we know what to do with. I took his comment of we're about to announce something relative to debt and dramatically cut their cost of capital. And yeah, I mean, holy cow, when you're hearing it straight from the guy's mouth, it's exactly what you're saying is lining up exactly what he is saying as well.
Yeah, because, look, I saw this play out in Canada and, and look, it wasn't popular when I said it before Canada went legal, right? It's that you're going to have very few survivors in Canada, you maybe have like a handful of companies. Realistically, you're really down to 2 companies in Canada, and it's Canopy and Tilray. And Tilray is only around because of the merger with Aphria. So it really is survival.
And
because once legalization happens, the whole world shifts. And I know that people think like, oh, I'm going to own, I'm going to have a big position in this tier 3 because they're, here or there. If you're, like as somebody that manages, not just my own money, but then, I also have a fund, you can't be in those things because like you could treat it as an option, but you can't have any type of size. At the end of the day, like there's going to be a couple of companies that are going to be swept up because of geography. Like you're probably talking about like 3 or maybe 4 companies. Okay. Right. And I think that you own one of the ones on my list. So far I've been pretty good about picking the winners that get taken out. I know who the next one is. I shouldn't know, but I do know.
I kind of heard that from Boris today, a second ago, right? He's like, hang on to your seats for the next 4 weeks, right?
The strategy for the tier 3 and tier 4 company is to get acquired by hopefully a tier 2, maybe a tier 1. The tier 1s do not want to buy anybody that's a tier 3 or tier 4, really. Unless there's like a dramatic need, or it's such a mess that they can get it really cheap. Right. And the reason being is there is a plethora of private companies that are nowhere near, the value of some of these tier 3, tier 4 companies. So like,
right.
I forget the name of the company now for some reason. So Boris bought, what was it? Was it the Green Solution?
That was Columbia Care bought the Green Solution.
Who did Boris buy in Colorado? I forget.
Was that the Los Sueños?
Okay.
The farm. It's the farm. Yeah.
Yeah. It was
or Trike.
Trike, right?
No, all right. I'm getting confused. Anyway, Boris paid something for. He was trying to buy Harvest. He bought a company, a private company, the same footprint as Harvest for under $400 million. Look, like Trulieve just paid $2 billion for Harvest.
Mm-hmm.
That's nuts. Okay, but they did it because they wanted that footprint in Arizona. That kind of makes sense because Harvest was the biggest player there. None of these tier 3s or tier 4s can say they're the biggest player anywhere. They're localized players in, maybe you could say, all right, Gage was the biggest, but yeah, TerrAscend took them out, which I think everybody knew TerrAscend was going to buy them. Then maybe, okay, well, what about Red, White, and Bloom? Yeah, maybe, but do you want to take a giant position in Red, White, and Bloom? Its stock is, completely missed the run. So yeah, maybe you can do it, but then you're going to have so basically they're like, okay, it's a double, right? So I just thought if you want to go to Vegas and play some roulette, go to Vegas and play some roulette. Allocate your money towards the companies that are going to survive that culling. Because once legalization happens, it is going to be a culling. There is nothing that I'm more certain of than that. And that's just how, and it's been like that in every industry. It was like that in alcohol. It was like that in tobacco. This isn't anything new, right? After Prohibition ended, there was hundreds of alcohol companies. Like now, try and name 5. You probably can't. And if you name 5, they're probably owned by the same conglomerate, right? Because the smaller guys end up getting sold off for parts. And the MSOs, the tier 1s anyway, only want to buy somebody that it's like, yeah, you do good business, but really we want you for your IP.
Right.
And for institutional guys that I talk to, when we discuss, because obviously I pitch my option strategy a lot in Vegas to a bunch of guys, and and some guys would just be like, yeah, I like that they these companies, but I hate the exposure to those.
Right.
So what I had said to you in Vegas was consolidate that, use the cash. What? If the other ones run up, who cares? But you focus on that, because what you'll end up creating is a sense of continuity within the industry, right? Because liquidity is an issue, right? And liquidity is an issue because you have people, small pockets of these little groups that are like, oh, I'm team, this tier 3 or this tier 4 company. They're polishing the brass on the Titanic, as they say, and they don't even know it.
Right. Yeah. And the nice thing is, one of our challenges is when people say, hey, look at the top 5 tier 1s and see how you're performing to it. I'll never be able to match that benchmark, right? I've got diversification rules. I have to have a few other things. And to your point too, it is easier, slightly easier to buy IIPR versus Trulieve, but it's also nice too, because if we want to make that pivot, it's super easy for us to sell IIPR and then make that change. And I do want to comment on one other thing that I heard Boris say that relative to what you're commenting about, which is when he talked about, the pathway for these tier 3, tier 4 brands is through his company. And he's making the decision point of, do I need to do that or not? Why don't I just promote my own brands and, deal with his own M&A? That's an interesting message across the bow relative to investors in some of those smaller tier 3, tier 4 public or non-public companies.
Yeah. It's like, hey, I just created a bike company. I made it myself in my garage. Look at these wheels. Yeah, it gets the job done. And he's like, well, I've got this aerospace engineer that I could hire. I'll spend the money up front and create a bike that's better, more aerodynamic, is smoother, blah, blah, blah. You can't compete, because at the end of the day, like the money and that you can invest into the creation of the product is really where you're gonna, look, you have to spend the money to differentiate yourself inside the marketplace. And that's one of the things that Curaleaf is definitely doing. And no, there isn't a smaller company, unless they invent some kind of, it'd be like if a company invented extraction. Okay, yeah, you're going to have to buy that, right? But if everybody is doing extraction the same way, well, all right, well, now I'm just going to create I'm going to create the formulations. I'm going to, that's what he did with Select, with Click Now and Squeeze before. He's like, oh, why do I want to compete with drink companies when I can create my own thing, my own infuser? Like, that's just next level thinking. And the only way you can have that next level thinking is by having that cash flow. And this is why all of those companies are at such a disadvantage, and people and the people that are trapped in those companies, because guys, 90% of the people are trapped,
Right.
And yeah, I'll hear dissension like, oh, I'm in at this price. Yeah, but you probably bought it higher, watched it go down, bought the dip heavier, and you're really not. You maybe you've got some shares lower, but you're underwater, and you're sitting in a stock that just doesn't move. And the opportunity cost being stuck in that position, right? Like, I don't care if it doubles. Like, I don't care if Forefront doubles at some point, if it's trading between 95 cents and $1 for 6 months, because I could, I could make that money elsewhere, or just buy an option, a long-term option, and get far more money than that thing would have to, quadruple to even come close to the option. So, for me, I think that sooner rather than later, MSOS should have a culling.
Yep. Well, I would say too, speaking of cash and looking for opportunities as you describe, very happy to hear his comments around Verano. That the fact that he's an investor, that he loves that company, and, thinking about what we were able to do, or what Dan was able to do, giving Dan all the credit really, a few days ago, to be able to, take some shareholders out, take a big position in there, get it at a great price, and start doing some shopping like that. It's, that cash really does provide a great opportunity like that. And that's not just simply placing a trade. There's weeks of work that go behind getting something like that done.
Yeah.
I think Verano, the unreleasing of the unlock was key. I love that. I know a lot of people were waiting on that. The fact that they just kind of accelerated the unlock.
Just rip the Band-Aid off, right?
Literally, that was literally the biggest overhang. I heard it from everyone. I heard it from, other institutions. And obviously the IR team's super savvy there, and I think that's great. And then, that way, we're seeing, the space has been a little weak lately, but the past couple of days, but obviously the shares are being absorbed. And I can tell you from other institutions I talked to, that name in particular is very high on people's list.
Yep, which is good. I'm excited about that.
Yeah, it's a good company, and George was working at, it wasn't a mystery. I think, Toby, we talked about this before Q2 came out, that this was something that George was looking to do.
Yeah, some people wanted them to extend the unlocks, like the lockups, extend it, and that was like, I was like, no, that's going the opposite direction. You're just pushing the overhang. You're extending the duration of the overhang.
And the uncertainty.
That.
Yeah.
Yeah, that is
yeah, when TrueLeave extended their unlock, I did a Spaces with Kim on it, and we talked about that, which I know people loved. But, I was pissed about it because I was like, dude, just rip the Band-Aid off now. And this is the summer of 2019. I'm like, just do it now. Like, who cares? You're going to get so many more shareholders. And I really wanted to buy it. I was like dying. I was like, just do, why did you extend it? Get it over with. If you're a good company, people are going to buy you. And if people don't get it, then great. You're giving an opportunity to a whole new group of people. So yeah, it's smart. Like, rip the Band-Aid off. If any of you guys listening ever takes a company public, just rip the Band-Aid off. And also make sure you put me on the cap table.
I like it.
Like in the seed round or round A,
yeah.
Right?
I won't go into a placement if I'm not the first money in. It's insulting. It's insulting if you bring me into a thing and all of a sudden you're trying, like Gage, okay? I'm not going to say who, but they were trying to they're like, hey, come into Gage. We'll give you a full sheet warrant on this. Everybody's getting a half warrant, but you have to put in 100,000. And I was like, okay, let me take a look. And so I brought it to my company, and I was like, hey, do we want to do this? I was like, Gage, and they were like, dude, do you look at the stuff we send you? And I was like, well, what are you talking about? They're like, you own it. I'm like, I own Gage? They're like, yeah. I go, well, how much do I own? They're like, you have $75,000 at 50 cents. I'm like, I do? I'm like, oh, nice. Why would I do this deal? So yeah, always be first money in. Don't, because it's just much better.
Hey Noah, I got a question for you guys. Obviously Eminence is a big shareholder. I think a couple other institutions are as well. Like, do you guys, how's the outreach with that going? And how does that go? Do they call you guys and you guys chat about the strategy and then they decide to buy in, or do some of these institutions just buy without even chatting with you?
It's both. It really just depends on the institution and the size. We know some have bought and then they call us and then they're following up with questions after they've made the decision. But others are absolutely calling, doing the due diligence, want to talk to Dan, want to walk through his approach, want to understand, where his guardrails are, where the limitations are, what he will do, what he won't do. So honestly, it's a little bit of both.
And are most of them buying the ETF because they can't invest directly in OTC or CSE listed stocks, or is it more just a liquidity thing that they could invest in those directly into the MSOs, but they won't because the stocks don't trade enough?
So I don't know in each, sort of situation, but I do know some of it, as you heard from Boris as well, right, relative to the custody issue. It's challenging for them, and it's a lot of work and time and effort compared to saying, all right, look at this ETF and we want to get into it. And what the nice thing is, right, which is where I would say the chatter you've seen on Twitter over the last few days is very different from the conversations, and I haven't listened to all of them, but some of the conversations I know we've had with institutions where they are not concerned about the cash, right? It's very liquid. It's listed on the New York Stock Exchange. It's very easy for them to buy it and hold it in their bank account. And they're good with the amount of cash, and they're good with the amount of that buffer because in many ways, as Jason described earlier, this is how the serious institutions invest. So for them, it becomes an easy way. They know that not every dollar is going to that exposure, but after having talked to Dan and understand the overall long-term objective of the fund, it's an easy way for them to put a dollar and spread it across a bunch of stocks, in a liquid trade, easy to custody, all of those things. Even the ones that can custody, it's a lot more trades. They don't want to jam, big dollars into those stocks because they know the ramifications for doing that in the micro cap and the small cap space. So they're actually good with putting money into the fund and then us being, as smart as we can be about putting that money to work because they look at it the same way. All right, I put $1 into the fund. I'm diversified. I call it, now probably after today with the redemptions, 90% exposed on my, dollar that I have in MSOS. So for them, it's just an easy way to get that exposure without, pushing the market around like they could easily do if they just threw the money directly at those stocks. And to be fair, too, I don't always know this part of it, but some of them probably are easily hedging it with options as well. So, it also, they can buy the ETF, they can leverage the options to hedge themselves if they want to. And so that gives them a little bit more flexibility than doing it on a stock-by-stock basis as well.
Yeah, for what it's worth, I heard of a couple funds that were long some of the MSOs and they were short the ETF, but not because they didn't like you guys. It was just
a
hedge,
hedge, right?
Yeah, as a hedge. So they were short the ETF, but they were long, and the comment was like, "Hey, like I'm happy to be stopped loss out of my MSOS short because when the MSOs rip, then I'm going to get stop loss out of the short position." And it was just more of a, they were net long the space, but they were just using it as a hedge.
Right.
So,
you make a good point in terms of the dynamics that we deal with, right? We have some long-term investors. We have some people who use it as a, alpha basket trading vehicle, and some are using it to hedge, and we're good with all of it. It still won't change, what our objective is as an active manager, which is, long-term performance, outperformance.
Yeah, got it. Okay, cool. Jason, any other questions for Noah, or Noah, anything else you wanted to kind of say?
I would say this is awesome. And I appreciate you guys having me on. The Boris interview was really good. And I would just thank you guys.
But Boris was the opener. Boris was the opening band for you.
Yeah, right.
Yeah, you were just as good.
You're the main act, Noah.
I don't know.
Yeah, you're the main act.
I don't have my phone in front of me, but I'm pretty sure the listeners probably dropped off by about 200 or so. At one point, you guys had 500 people on this thing.
We're
that
still
was super
up there.
cool. And I don't want to overly kiss Jason's ass, but I've said this multiple times. My entry into the space was, doing exactly this right about this time, in fact, where I'm flipping open the laptop and trying to get some work done, and Jason's live streaming on Twitter, and I'm just watching and listening and absorbing and trying to understand the space. And I've learned, so much of the space from him. Following you, Toby, our engagement on Twitter has been extremely helpful for me. So, I appreciate you guys. You guys have been supportive. You've been critical when you need to be, and we don't mind that at all. Hopefully you guys know that. And but more than anything, we've learned a lot from you guys.
Oh, thank you. I appreciate that.
Sure.
Yeah. One day I'm going to have an ETF. It's as long as the symbol Jedi is available.
I will request it. I got to imagine someone's held it, but I will check tomorrow for you, and then and we'll talk.
Okay.
Jason, I need you to have like an options ETF or like an option strategy. I'm very new to options.
I like it.
You know, I think I'm a pretty sophisticated investor, but I'm just more of a plain vanilla investor. Like I invest a lot in real estate. I invest a lot in MSOs and options. I've had so many conversations with Jason on like options strategies and lately I just kind of buy what he tells me to buy. So hopefully he's not selling me. Hopefully I'm not buying his options from him. I'm just like, I'm so lost. I'm so lost sometimes. You guys know that like meme with Zach Galifianakis or whatever, and it's like all the math equations.
Right.
I'm like that when I look at options.
Yeah, I'm with you.
So Jason, you need to raise money for an options fund. I will be an LP.
I like
all
it.
right, cool.
I like it.
All right. Thanks,
Okay,
Noah.
cool. Do you want to?
Yeah, thank you for having me
thanks,
on.
Noah.
Thank you. I appreciate it.
Why don't we take like one or two questions and then wrap up?
Yeah.
Let's see. Just add. There's only a few people that have been waiting a while. Okay, Persia. How's it going? Persian.
Like Persian.
You've been waiting for a while.
Persian
Yep.
gold.
Persian saw God. Can you hear me?
Yeah, hold
Can
on.
you hear
He's
us?
connecting. Or she.
Oh, good.
I think. Ooh. Guys, also, if you're going to connect with us, no like kids or ambulance in the background, please.
We're pouring bourbon like Noah was.
Yeah.
Sorry, guilty.
You're allowed, Noah. It's been a little. Twitter's been a little rough the past couple days.
Yeah. All right. Let's go to Jason R. Unmute yourself, Jason R. Jason Robinson.
Hey guys, great discussion.
Thank you.
Question is on the tier ones, and this might be a tough call, but do you guys have a favorite?
Yeah, I'll start.
Okay.
Curaleaf.
Thanks, guys.
Yeah, look, for everything that Boris talked about, for really seeing the forest for the trees, I think that Curaleaf did the hard work first. But I will say that like Green Thumb and Trulieve at one point were my biggest positions also. And as I really gotten into the weeds, pardon the pun, with the sector. I just think that they've done the hard work. They've diluted themselves in a good way, and that eventually the True Leaves and the Green Thumbs and the Crescos are going to have to do the same thing. So, I like Curaleaf because of that expansion, and also because of Europe. As somebody that's, getting pretty heavily invested in Europe, I don't know. It's just kind of more aligned with my strategy. And honestly, I like that Curaleaf isn't as fast a mover as everything else because I don't just trade cannabis. I trade a lot of options, and I'm rolling 50% of that profit into some of these longer term positions. And I know it's not going to swing on me wildly within a day. So, but I think you can't go wrong with, Curaleaf, Green Thumb, Verano, Trulieve, Cresco. All right.
My answer is pretty similar. I mean, I've said Curaleaf and Green Thumb, I think are where I would definitely overweight within the tier ones. And I fully recognize, honestly, I think Verano, Verano's just so cheap. So I think from a percentage upside perspective, I think Verano could have the most upside over the next couple of years, just from a re-rating. It's cheap partially because it's just a liquidity thing. The stock's not liquid, et cetera. They're not as well known as Green Thumb or Curaleaf or the others. That Verano could actually have the most upside, but from as far as like where I have the most of my money, it's in Green Thumb and Curaleaf. Green Thumb is my largest position. Actually, that has more to do just with timing of the buys. But I'm, if I had to bet on which company is going to be the biggest cannabis company in the world, I would say Curaleaf. So, I don't necessarily look at things as like what's going to give me the most juice. I always do kind of a risk reward analysis. And look, I think the sector favors going with the largest operators. And there's a reason why when you look at the comp sheet, and again, I know Free Cash Flow is on this call, so thank you, Free Cash Flow, for his hard work on the comp sheet. There's a reason that Green Thumb and Curaleaf have consistently traded at a premium to the rest of the group. And I talked to a bunch of institutions, and they share that sentiment as well. So I would say Curaleaf and Green Thumb. But again, like this is no disrespect to the other 3 tier ones. I think they're all great, and I have positions in them all.
I don't think anyone cares about my allocation, but it's a beating to buy individual stocks. I have to pre-clear all my equity trades, so I'm just invested at MSOS. But I did, for full disclosure, sell a little bit of that, sold a little bit of PSIL. And here's a shameless plug. If you believe, we're growing significantly higher in the cannabis space from here, I did start to allocate to PSDN to get a little extra leveraging volatility.
Okay, cool. Champagne. Sean,
Yeah, hey.
Do you have a question?
Thank you for hosting this, guys. I love listening to you, and I love the insight. I have a pretty good core that I've established of MSOS and pretty much Curaleaf for my main holdings. I guess of course, absolutely. I guess I'm going to kind of direct this to Jason for the next move for a long-term ad. Would you do MSOS Leaps, or would you go shares of one of the top tiers?
Well, if you think that that one of the top tiers is going to go up, so let's say Green Thumb, okay? Let's say you're like, all right, should I do it in Green Thumb? Should I put it in Leaps? You can't compare the two. It's crazy. So I'll just give you an idea. I was looking to reallocate about $200,000 back into the sector. And I was like, well, I can buy like another 20,000 shares of Curaleaf, with that money. And I was just kind of like, man, I already own a lot of this. Do I want to buy Green Thumb? Do I want to buy Trulieve? And I was just like kind of getting stuck on that 20,000 share number. And I was like, I don't know if we're going to, if we're going to make a move, like what, like, do I want to save this for, when they taper, when the taper ends and when, interest rates go up, because I know I'm going to, I don't want to have to sell things in order to buy things. And I was like, look, I really believe in the sector. I go, it might take some time. And I was like, you know what? I started doing the math on the leaps. Okay. And I was looking at I was already in the 2023s, but I didn't have really much of a position. I think I had like 20 contracts at the time. And, I bought them at $6 and I bought them all the way up to like $8, not as heavy as when I was buying them at $6. I was just kind of adding, profit from other trades. And then I started really looking at an options calculator. And I was just kind of like, okay, well, where do I think the sector will be in a year? Right? After all of this nonsense, work under the assumption that I'm going to buy these things. I'm going to get hit by a car. I'm going to be in a coma, and I'm going to wake up fine with like a week to expiration. Okay. And I was like, well, where do you think it'll be? And I was like, well, if we get safe, which is in play, I think that by February we could see like 45, 50. Okay. Okay. And if not, okay, I think that we see 40 next year, 45. Probably, 50, 55, whatever it is. So I work under that assumption. And then while I'm contemplating this, some idiot decides to write contracts for 2024. And I was like, what? These weren't even at play. So I started looking at the 2024s, and then I start doing the same thing. Well, where do I think it'll be? And I have a number in place. So I have my super conservative number, which is MSOS at $75 by 2024. And it's higher on the assumption that we have an uplist before then. If there's an uplist before then, before those strikes, which are January 19th, I think that you're going to see a crazy move, and you could see MSOS anywhere from like 100 to like 150. So, I'm working under the assumption of 105 being the top. Don't ask me why I came to that number. I have a quant.
I'm okay with it.
Got to have a quant.
Yeah. Anyway, so I started doing the math, and I was like, this is crazy, And so I called my quant, and he helped me when I was looking to get back into the LPs in the summer of 2019, because I had sold everything, or 80% in October of 18, and then the last 20%. And I was just like, man, I am too flush with cash, and I can buy everything like 5X. Should I? Anyway, so I brought this to him, and I was like, what do you think about buying the 30s and the 40s, and then selling the 30s, into the possibility of safe, right? And he's like, yeah, if it happens and you get any kind of move to like, 40, you're going to kill it. You're going to, make over 200%. He's like, I'm going to take this trade. And so the idea is take that trade, have the 30s pay for the 40s, and then, still take some off, because guys, I won't own 30s by March. You guys know my position on March. That shit's still in play. Taper is going to happen. And then, interest rates are going to go up, and, hopefully the market doesn't panic, but, it could be dicey in the summer. Anyway. So to just give you an idea, had I deployed that money into Curaleaf or Green Thumb, because Green Thumb was under 20, that position, if I owned Green Thumb, would have gone up 70,000. Okay. And now it'd only be up 10,000 or 20,000. All right. With the option, and if I did Curaleaf, I'd be underwater 20,000. So in that last week, so I ended up building up my position to, just under where I was looking to. And in a week, it was worth $500,000. You're not going to get that type of move from Curaleaf or Green Thumb or TrueLeaf. Like, I don't care what they do. And, and then the other side of that is like, okay, well, let's say Green Thumb just goes to 100. Well, guess what? If Green Thumb's going to 100, MSOS is taking the same move. And your options, because it's the only way that you can get leverage in the space, are going to print. So to give you an idea, if I hit the low end and let's say 75 on those 40s, I'm going to make about, I think it was like 500% on it. And on the high end, I'm making close to 2,000%.
It's not a bad trade. Not a bad trade.
But the thing is, when you're trading options, there is going to be volatility and there is going to be beta. So you can't just sit on your position. So you have to take some off. So I took some off on Monday because I'm, I've been in the sector long enough to know that they're going to sell the news. Now, I didn't take enough off, right? But that's because my position is just too big. But where I saw bids where I was like, man, somebody's trying to bid this up. They're pretty stupid. Like, it shouldn't be this high. Yeah, I would sell a couple of contracts. And then like today, I was buying those contracts. And then yesterday, I was buying those contracts back for, 10 to 20% less, and then keeping the same amount of contracts. So you have to hold a core and trade a core. And I have other contracts. I don't post them because they're a lot riskier. But I think that the 30 2023s and the 40 2024s are pretty much bulletproof. And I think I said this to Toby yesterday. I go, I'm having a hard time not just selling half of my positions and putting it in these. But the only thing that stops me is, look, eventually I know that we will have uplist, and I want to have those massive positions. That way I can sell premium, on them. But at the end of the day, I'm also fully prepared, if we get that Goldilocks surprise scenario where, let's say we get uplisting in 2022, all right, which I think is a long shot, but let's just say, and these things just run wild. I'm fully prepared to execute those options and then just own MSOS and just have a giant position on MSOS for super cheap. And for like the 30s, I mean, at the time, for the 30s, it's like, it would cost me $600,000 to buy at 30. But if it's at 100, I don't give a shit, So yeah, I think that, especially for some of you guys that have losses, I think that you should harvest them, especially if you're holding like tier 3, tier 4 garbage, sell it. You'll make way more money on the option, but don't be scared at the price of the option, and don't try and buy a $60 strike for 2023. Buy something that is expensive now that you think is bulletproof. And if you do that, I promise you, and you're right, you're going to make way more money than anything that you were holding, especially if you were holding a bag. So that's the answer to your question.
I thought you promised to cover people's losses too.
Yeah,
I saw that. I saw that.
I said I'd cover your losses.
But okay,
all right.
Okay, just mine. But you're taking 20% of my gains. Yeah, I forget what the structure was.
I'll cover. Yeah, I'll take 20% of your gains, and I'll cover your losses on those 40s.
I mean, do you, Jason? Do you want to share? I mean, if you're comfortable sharing, just what percent? Because obviously, like you always play options, but is options like a heavier weight in your portfolio than usual now, or just you don't have to share specific numbers, but just what's the how? I'm just trying to gauge the confidence in as far as like options versus buying the actual stocks.
Okay, so up until this week, my options position became bigger than my biggest MSO holding, which is pretty big.
Got it. But today you did buy you did actually buy a stock.
Yeah.
Right?
I bought
over the options.
Yeah, and I'm kicking I actually did both. Right? So I'm budgeting I'm buying basically 10 grand worth of options a day. So I'm, and I'm not buying anything that Todd's buying, and he's not buying anything that I'm in. So we're staying out of each other's way. I'm also doing it with my money, so I have to be a little bit patient with it. But yeah, I mean, and look, I have other strikes, other dates. They're still expensive, but they're not, I don't have like 300 days on them or 793 days to go on them. But yeah, I mean, look, I'm fully aware that if I'm wrong, I'm going to lose, a $500,000. But like with Booker and that stunt he pulled, to kind of put that in perspective, it basically cost me 250 grand on MSOS options, and the crazy thing is that I was up. And that was just poor management. That was just me fighting and just couldn't believe like the stupidity that came out of his mouth. So yeah, look, I had $41 calls for November, which I lost 110 grand on those. And that's fine. Like, look, you're going to get taxed, but you're going to, options isn't for everybody, right? And I tend to just play my options with house money. So I roll profits from other trades that maybe aren't as aggressive into those as a way to keep it. But I also, when there's profit there, I take it, and you got to be okay. You just can't get greedy with options. But yeah, basically, my options position is bigger than my biggest holding, and my biggest holding is Curaleaf. But it was like, it was right there. It started out as being worth half, like all my MSO options, and now it's worth, in a week, it doubled. So
awesome.
yeah.
All right. I appreciate the insight as always, and I appreciate what you guys do on social media, especially for the sector. So thanks for your time, and thanks for hosting this.
Thank you.
Yeah, thank you. All right, Funky Monkey, I added you. If you want to ask your question.
Hey, yeah. Good evening, guys. Thanks for the call. So I invested in cannabis back in like 17, 18 through the Canadian whole piece, and then went down, and then I got out, and then went back into. I said screw that, and I came into the MSOs, US MSOs, and rode those nicely, and made great profits up until February of this year. And luckily, I had exited in February, and then moved into. I've been in the meme stock saga here over the past few months, and have increased my the size of my portfolio, and have kind of maybe learned a little bit more about market structure and kind of the whole saga with what has gone on. And my plan is to go back into the MSOs like Curaleaf, Trulieve, and Green Thumb. But now that I have a larger amount to put in, for some reason now I'm a little more sensitive, and I'm like, wait a minute, is it safe to put this in the OTC market? So my question is that the only option, and is that okay to put it in, where it's on the OTC only?
Okay, I got this one. What did you buy, AMC or GameStop?
AMC.
Okay, so basically you bought garbage, and that garbage turned into a pot of gold. Okay, so it required, and this isn't a knock, because look, I've been in that situation too.
Mm-hmm.
It required no thought. Okay, you bought a stock that was junk because it was cheap, and then it ripped. everybody is, I mean, look, Tilray's done it. Okay.
Sure.
That's what you call lucky money.
Mm-hmm.
Lucky money is the first money to go. What you should do now, you're fine investing in these companies. Look, they're billion-dollar companies. They're not going to get delisted or anything like that. You don't have to worry.
Okay.
The quality of the company is better than the quality of what you hit a home run on. But, also, you don't have to put the whole thing to work, right? You can put some of that money to work, one, pay off debt, do things like that. And then you can take that amount of money. I don't know how much you made, but, let's just say you put $5,000 in and it turned into 50. Okay. Right.
Well, I'm in the six figures.
Okay. Same thing.
Yeah.
Right. But what did it start as?
Well, I guess it was low six figures, doubled it in cannabis, got out, and then doubled it again.
I'm just talking about the meme stock.
Yeah, like what was it? Maybe 200 to 600.
Okay. So you don't, look, you can invest in whatever the fuck you want because you're playing with house money. Just don't buy shitty companies. It's
right.
It's that simple.
Well, right. Well, that's what I was like. Okay, here we go. 600 all in. I'm going to diversify in the MSOs, and I'm ready to go. And then I'm like, oh wait, it's OTC. Am I doing something stupid here?
No, you're not doing anything stupid. But you also have to understand that, look, they probably pull back in the summer. They could go on a run. You have to actively manage it. So like you can go half in if you want to start the clock. You're not going to, the fundamentals are only improving. But, you could, invest in psilocybin companies. You can, buy transportation, like buy Spirit Airlines. You want something that's safe? Put $100,000 in Spirit Airlines. It's $23 right now. I bet it's 40 in 6 months. At the end of the day, there's really no way to play with house money. Just, don't fucking gamble on meme stocks. All right? Because if you try and jump into the next meme stock, that's going to be the thing that blows you up. And then you're going to be like, I could have done this, I could have done that with that money. And that's a very hard conversation to have with yourself.
Yeah. Yeah, so, no, I realized that. I realized that it was lucky and
lucky money is the first money to go. So you take the lucky money, if you have a mortgage, you pay off your mortgage. You got credit card debt, pay off your debt. You got student loans, pay off that. Because then you're making money anyway, because you're not paying interest rates. So you're welcome.
Yeah, cool. So OTC is fine. Thank you.
You're welcome. Anyone else? Anyone else, Toby? Let's go. I'm going to go with Duty. Duty. If you don't sound like Rudy Giuliani, I'm going to be pissed.
Hi there.
Hey, Duty.
Hey, first off, thank you for this. Personally, my favorite tier one is Cresco. I just think Charlie Bachtell is the best CEO in the business, and they continually exceed and beat expectations. But that's my opinion.
Yeah, I would say that Cresco is my second biggest position.
Yeah.
And Charlie went to the same school as me, and I would still disagree with you. But
okay.
Part
of the reason that I like them is because they're in California, and California's getting its ass kicked lately. But
but that's the problem. That's the headwind.
Right.
I won't invest in.
Well, they just exited a big piece of their California.
Their distribution part. Right.
Yeah.
But they're not going anywhere as far as
they're
the
not
brands.
Going anywhere.
Right.
Cresco will merge with one of the big three, I think.
Yeah, I mean, California's huge, and I actually heard Boris mention something about a West Coast strategy, and the company I wanted to ask about was Lowell Farms, and how you put them in the mix of all this. You're talking about tiers. They're not really an MSO. They're more of just like a brand in California. I know they're licensed in like 2 or 3 other states now. If you think they're a kind of a potential roll up for a big MSO,
Yeah.
or do you think they're going to get cold, like you said?
I mean, I think you got to look at it as an option. You don't build a giant position around a Lowell Farms. And who's the CEO of Lowell Farms? He's a nice guy. I forget his name. Anyway, yeah, I mean, they're okay, but at the end of the day, it's probably cheap. I don't know what the price is. You buy cheap, you buy twice, right? You know, if you want the exposure, maybe think about buying the company that would maybe buy them out. You know, that really should be the approach. You know, but yeah, I really don't waste my time with anything that's not a tier 1. And honestly, like the tier 2s that I own, I'm just kind of like, why do I even own this at this point?
You mean like a Jushi?
You know? I mean, I would, like a Jushi, Jushi, like a Planet 13, like a
Goodness Growth.
Not even on my radar.
Okay.
You know, so like you know, like Toby said, overweight the tier 1s, sprinkle in some tier 2s. It's like if you're going to make a cannabis portfolio, 70% tier 1s, like 10% tier 2s, 3s, and really just tier 2s, and then 20% options.
Yeah, I'm mostly in Cresco and Verano. I got some money stuck in Lowell. I don't know. Maybe I'll take some loss and buy some MSO options. I don't know.
Yeah.
I mean, I just think, and I've said this before on Twitter. I've been pretty vocal about this on Twitter. Look, I mean, it's just like you've done all this work, right? Like you're bullish on the U.S. cannabis sector. You know, I'm assuming most people on here are pretty bullish on it. You've already come like 95% of the way, and you know you have this big thesis, and you're front running the institutions. I'm always just amazed that people would then deploy capital or a significant portion of their capital into these tier 3s and 4s. It just doesn't make any sense to me because the tier 1s are not only best positioned, but we all think they're the biggest companies, and they are in the space, but they're still tiny. I mean, Curaleaf is under 10 billion, Green Thumb's under 7 billion. Like Verano and Cresco are $4.5 billion market caps. Like these are still tiny. And with those, the smaller companies, there's just a lot more risk. I mean, look, I've been an investor for 18 years. I've met with probably close to 1,000 companies. I always say you're investing in the people. And that's true. Like even when I'm buying real estate, like with people, like I'm investing in people. You have to invest in people. And there's a clear, you know, there's exceptions. There's like, obviously, I think the tier 2s have pretty good management teams, but there's just a clear difference between the management teams at the tier 1s and the tier 3s and 4s. I mean, very clear difference, night and day. So, you know, I think the biggest problem too with a lot of the tier 3s and 4s is that some of them just aren't even like cash flowing. So this is a very, you know, difficult industry to operate in. It's very capital intensive. The cost of capital is really high. And some of these names, I'm looking at the comp sheet now. I mean, they're not even profitable. They're going to have to raise capital, and their stocks are like at $1, $2. I just, you know, for me, like I always say, look, like forget about what your entry price was. Your cost basis, your future returns from today have nothing to do with your cost basis. So every single day, reevaluate your portfolio, and you know, if you have a unique thesis around Lowell, then stay in it, you know. But I don't know. It's just for me, it's like the tier 1s are just the whole space is undervalued, and you know, yeah, you could maybe squeeze a little more juice out of the tier 3s, but is it worth the risk? I always come back to the risk reward. Is it worth the risk? Because we just told you, and Boris just told you, all the tier 1s don't need to raise equity capital. So that's just huge. You cannot say the same thing about the smaller companies. California's just tough too. I mean, guys, you guys have, just look at any of these California companies that have just reported. I mean,
Yeah.
it was, yeah, it's tough. And I live in California. I've been pretty negative, and I've been pretty negative on the California operators. And this is coming from a guy that lives in California I've seen the P&Ls of private California operators, because I've checked out some private investments, and I've passed on all of them. And, that's been a good strategy so far.
Yeah, California, they did just pass that hemp regulation bill, which I think is pretty bullish for Charlotte's Web, but we'll see about that. Have you been following that?
Yeah, Charlotte's Web is an awful, awful operator. And I know that because they came to my group and asked for $15 million in cash. I went and checked it out. I think it's actually my Instagram picture, or it was. Yeah, they're garbage. They're complete garbage, but they've been garbage for a long time. I actually, I was on Noah and Dan. I'm like, please just sell all your Charlotte's Web, please.
Okay,
Yeah,
thanks.
They're doing a good job. All right, Iris.
Okay.
Hey,
Iris.
Jason and Toby, I'd love to get your take. You mentioned Lowell Brands, and that's Lowell Farms, and that's one of the companies I really like, just from a branding and a consumer perspective, right? I'm not really speaking from a asset management fundamentals perspective, but when I look at a brand or a company like Lowell Farms, and I look at, let's say, cookies, for example, and I think about the time we had George Archos on our Alpha Nooner, talking, on behalf of Burano, and talking about the challenges they have on a state-by-state basis, right? What can be on a label? What can be on packaging? And what I love about Lowell Farms is it feels like a very mature, quality craft brand, right? And when I look at a company, or I think of a company that I think, if we are moving towards descheduling or legalization, and the scrutiny is going to be 10 times higher, I think, on these companies, right, relative to how they market and advertise, I look at companies like that and think, man, what a craft, cannabis, professional, adult-focused branding. I don't get that same vibe, and I know there's a lot of positive things about the cookie brands, or at least the quality of their product, but their branding strikes me as the poster child of what the politicians who are against what we are all trying to accomplish here are going to show, to say, this looks like, children's cereal boxes. I'd love to hear you guys' take on something like that, right? Maybe, I don't know, I was about to say fundamentals aside, but I know you can't put fundamentals aside, but what's your take on where we are heading, and who are the companies that, besides the big ones, I think that's different, but when I look at sort of smaller companies, who's best positioned to be that next M&A opportunity, or have that growth, or run into less challenges as it relates to where we're trying to go overall in this industry?
Yeah, I mean, I agree with you. Like the cookies brand, it's kind of like a bro-y kind of brand, right? So
right,
you need a brand that is going to have mass appeal and appeal to specific demographics, i.e., the fastest growing demographic. So you want to appeal to women and old people, basically. Especially if you're kind of trying to position it as